What's up, guys? What's popping? So we're still going to continue on the market structure, on the advanced market structure. Sorry, advanced there does not mean it's something that is holier than thou, that is up there that you can understand. Advanced simply means that it's not just the normal and the usual higher highs and higher lows. You understand? Because market, like I said in the last video, the market does not just move perfectly like that. You understand? So there are areas of liquidity that market needs to run through. There are, points of interest, institutional place of reference that the market needs to obey. You understand? And if you're just trading higher highs and higher lows like that, you won't be able to understand all those things in detail. So let's go straight to the business of the day. So I think yesterday or the day before yesterday, somebody asked me a very interesting question, and that's the question I want to deal with now. The person was like, okay, if, for instance, as an intraday trader now, I'm an intraday trader. For instance, if the daily structure is bearish, or let's just say it's bullish. Let me hope I remember that question very well. If the daily structure is bullish, the 4 hours and the 1 hour is also bullish. Then in lower time frames like the 15 minutes, 5 minutes, and 1 minute is bearish. How are we going to tackle situations like that? I believe that this question I was going to answer this explanation I want to do now is going to answer many other questions. When the higher time frame is saying something different from the lower time frames, what are you going to do? So let me change the chart color. This is GBP USD. Now, I will just show you guys how I read the markets, you understand? This is still market structure. I'll show you how I read the markets. I don't want to talk about other blogs and all. I want to show you how I read the markets, all right? So let me change the color of this chart, please. All right. So first off, when I go to, normally I start from the 4 hours, but for the explanation I want to give now, start from the daily, you understand? As a day trader or intraday trader, you don't necessarily need the informations on you only need few information from the weekly and the monthly. Like, so you don't really need much information there. You just need to just look to the left and look at the 2 major candles or the 2 last candles in the weekly and the daily. Or daily you can still look at the trend, but in the monthly and weekly you don't really need to look much there, you understand? So let's say daily, for instance, now, all right, we see that this daily is bullish, you understand? This is a bullish move. You don't necessarily need all these ones. You have to look at the most current one, and we see that it's bullish, you understand? There's no point of interest here that needs to be mitigated. This is a bullish structure, right? Then I go to the 4 hours. When I go to the 4 hours now, this is how I restructure. I look for point of interest, you understand? But since we're talking about market structure here, let's just mark out our higher highs and our higher lows, you understand? Higher highs, higher lows, and thereabout. So let's scroll back a little bit. Scroll back to about, let's see, let's scroll back to, sorry, oh dear. I think my data is not loading again. I think this is the farthest it can go. All right, so let's just use this information, you understand? Let's just use this information it has provided. So let's say this is a bullish trend, right? This is a bullish trend. We see a higher high here, a higher low, all right? Market break past this place here, all right? Let me use this. This is a higher high, higher low. Market broke past this swing high here. Then this is the new higher high now. This was the last higher high. Then this is now a valid higher low. There's a higher high, higher low, higher high. This did not break below, it did not close below this guy. So this is the higher high, and this is your lower, this is your higher low still. Not this is your higher low. Higher high, higher low, higher high. It did not, okay, sorry. This is your higher high, higher low, higher high, higher low. Alright? Alright, this, okay, higher high, higher low, higher high. Now there was something like a break of structure here, you understand? You see? So immediately markets see something here. This is a higher high, higher low, higher high. All right, see something? When you, let me come again. This is a higher high, higher low, higher high. I don't want to confuse you guys. This is a higher high, higher low. This is a higher high, this is a higher low. This is not a higher high, see? I know, look at this thing. If you're considering a higher high, you have to make sure that it is the whole body of a candle that closed above the last swing. You understand? See this place, for instance. Now this is a, you see, this is a higher high. See something here now. See something here. All right, it's not that straight, but I need to get what I'm talking about. See, this is the higher high, right? See, it's the candle of the body that closed above this swing high, this higher high here. That means this can be considered a break of market structure. Now, this is now a valid higher high. You understand? This is now a valid higher high because the candle closed above this guy, not a wick, not the wick that closed above it. Assuming this was, let me zoom in a little bit. All right, assuming this is this wick that was higher than this one, it's still not a break of markets. It's still not, going to create a new higher high because it's the candle we're looking to close above this guy. You understand? So same thing goes to this place here. Same thing applies here. This is the higher high, right? We see now. You see, this was actually a fake out. This one will not be considered the new higher high. You understand? This is the new higher high here. You understand? Because that's closed above this place with a candle. We're getting the concept now. All right. That's why we get stopped out most of the times. All right. This is a higher high, right? Let's take our line, higher high, and see something here now. See, this is not a higher high. You understand? The candle did not close above this guy. You see what I'm talking about now? This is where you guys get liquidated. Like seriously, see something. This is a higher high, higher low, higher high. This is not a higher high. This is not a higher high. This is a higher high. But this price did not close above this guy here. So this is still a high. You understand? This is our major higher high here now. So let's extend the, our trend line to where, it actually created a new higher high. Actually, that's not where it is. See something here now. See, the candle closed above this guy here now. You see how it's very, very meticulous if you start reading structure properly from the scratch, you understand? Not all those your higher high, higher low. You don't read structure like that. You read your structure. Thank God for candlestick. You read your structure based on what the story of the candlestick is telling you. This is the 4 hours time frame now. That's where I'm reading my structure from. You have to be very meticulous, all right? So this is your new higher high now. This is swing top, right? It has broken past this higher high. This is a new higher high now. So see what happened here now. Assuming you use this as your higher high, you remember what we know to be change of market character. When the price has closed below the higher low, when price closed below this higher low, we call it a break of market structure. You understand? We can probably just call here a break of market structure like this. But guess what? Price just faked everybody all out in this place here because this is your higher high now. You understand? This was not the higher high. It's not what I'm talking about. So this is not your higher low. As long as this is your last higher high, this remains your last higher low. As long as price has not broken below this guy here, you are still safe. And you're still in a safe bullish trend. You understand? So you see all this. I know price created an order block here and people will have entered in this order block here. See something? People will have entered in this order block here now. You understand? People will have entered in this order block here because since market has broken structure, you should just retest it and go back. But no, market has not broken structure yet. This is not your swing low. This is your swing low here because this was not your higher high. This is your higher high here. You understand? So this is your higher low. This is your higher high. You understand? This is not your. Let me even draw something. So I'm gonna, as I'm explaining, this might be a little bit slow, but I need you guys to understand this thing properly. All right? You guys understand this thing properly. All right. Sorry. All right. Higher high, higher low. Sorry. This is your higher high here. All right. Don't be deceived by this guy here. It did not close above this one here. This is your higher high here. All right. You have to learn how to read the structures properly. It's your higher low now. So this is not a break of structure. That's just figure you out. So any other block that is here is just deceiving. You understand? Then this is your next higher high here. You understand? This is your next higher high here. Your next higher high here. All right. And if there's a change of character, let's go further. All right, so this is your higher low, a valid higher low, you understand? So then as we read these structures properly, all these things I'm doing is just for us to understand. Our main goal is to understand the VIX strategy, but all these little things are just milestones we're just climbing. We need to understand this thing. If not, if you read the structure mostly, and I'm just telling you, teaching you how about the entry and how to enter the market and how to come outside, because you know you are reading the structure wrongly, it seems as if the POI you are marking are wrong. But because you're reading the markets wrongly, that's why the market is mostly taking you out. If you read the market right alone, I can't even do a lot for you, like seriously. So I don't want this video to be too long. It's already extending to where I don't. Okay, the market close above this guy. Let's check it out. Let's check it out. Let's check it out. Price closed above it a little bit, but it closed above it. So that's a valid higher high. The valid higher high. Same goes to the change of character also. When the market closed and it did not close below the higher low with a candle body, it's not a break, it's not a change of market character. You're still in a bullish trend, you understand? So this happens and thereabouts, and that's how you read your market structure. That's how you read your market structure, basically, you understand? I'm still looking, and there was, see, market just keep on. You remember this, all this thing here is just a range that is still in this big range here, you understand? So all these guys here, they were, if you go lower to the lower time frame, they were, you know, that's when I'll be teaching about entries. There were still parts that, you know, you would have entered here, you know, that's counter trending though, but since you're scalping, you might still be safe in all these cells, but the entire trend is still bullish, you understand? So as a intraday trader, I advise you mark your main structure from the 4 hours. You understand? Then when you go to like the 15 minutes and the 5 minutes, you can now start, you know, entering your trades based on retest or based on the push phase. You understand? You don't just enter because you feel market has broke structure. Make sure you're marking your structure based on what the 4 hours are saying. You understand? But we don't enter in the 4 hours. We don't enter in the 4 hours. Let me just give you how I enter it. Let me tell you how I enter a trade, for instance, now. Right? You see, I want to enter a buy now. You understand? I want to enter, let's say, an overall type of buy. Let's ignore all these ones out, because definitely I will still find trades in all this place, because when I want to scalp, I know how to find trades in all this place. But let's just say market gave you a higher high, okay, a higher high, higher low, a higher high. Remember, I want to buy a higher low and a higher high. Now I'm waiting for market to come back to this other block or something, right? So let me just mark that other block there. Since I can't extend it way to the future, I'll just put some kind of vertical line there, or horizontal line, what you guys call it, all right? So now, remember that's the top of the other block, right? But I will not just enter if price hits the block, you understand? If price hits the line, I will still go to the lower time frame to look for smaller stops and see what happened. Price actually really came back to that place, and I will have taken that buy. If I screw lower, I will have taken that buy and to have gone up. You understand? So we're still talking about market structure though. We're still talking about market structure. So this is the other block here I marked. This will have taken days, probably weeks before it came back to that place, and I will have found other entries. But you see, it still obeyed that other block just because I was marking structure correctly. Alright guys, I don't want this video to be too long, so I'll make sure I drop a video again as quick as possible, because there's a lot to cover here, and there's a lot to cover. So in the next video, I'll be talking about other blocks. I'll be talking about fair value gaps. We have to hasten this thing up a little bit, you understand? So any questions you don't understand, it's based on your questions now I'll be using to explain, you understand? But I'll just have to run through this big strategy first, you understand? So advanced market structure, I'll talk about one more video on this, you understand? With the next video I'll be talking about, I'll make sure I merge all the blocks, the liquidity, and this video, and the market structure together. But the thing is just that the time limit I want to be setting for this video is becoming too short for the explanation I want to do. Like seriously, sometimes the explanation I want to do might want to take close to 45 minutes or 30 minutes, but at the same time the video will have started extending past the 10 minutes mark I want it to spend. So have a little problem there, but we'll find a way to do those things. All right, so cheers and God bless, fam. Keep on grinding, stay on your charts, keep on back testing and test the strategy if they work. If I'm actually really saying trash or they actually really work for real. You understand? Cheers and God bless.